Hello and welcome to Long Investor. So let's take a look at the market today and what to expect for this week. If you have been following my video, you know I've talked about the 13.3K, the 13K, 12.5K, and a possible retest of the bottom resistance here, which is at 12K. So this is nothing new. It is still within expectation. And when we had the 6 big tech earnings last week, I was saying if all 6 of them missed, then we will possibly see the 12K along with the FOMC meeting this week. So today in the morning, we started at 12.3K and then we dropped to 12.2K and then we had a little bit of recovery back to the 12.5K zone. The previous support now becomes the resistance. So I did no trade on stocks today, but I did buy a little more TMF today, as TLT had a breakdown and it was trading around the 117 zone. And in my previous video, I was talking about the bond and I was expecting a little breakdown from TLT, which will bring it near the 116 zone and which will bring TMF to around 12.8. So it was close enough today and I bought a little bit of TMF at 13.7 and I bought about half of what I'm intending to average down. So right now if it drops to 12.7, then I will buy the remaining half, and if it doesn't get there, then at least I have averaged down some on my $15 buy price. And gold also dropped a little bit today. It got as low as 1850 and I was giving a target for 1820 as a average down. So GDXU dropped to about 10.7, but if you remember, I bought it at 11.7, so it's not that much of an advantage to average down just yet for me. And if I really have to average down on GDXU, I think I'll be looking at maybe at below $10, so maybe anywhere between $8 to $9. That would be my average down price if GDXU manages to get there. So the FOMC meeting is tomorrow and on Wednesday, so we might see the market going sideways until the announcement is confirmed on the basis point. And as I've mentioned, the market already priced in on the 50 and 75 basis point. So once that confirmed, we might see a little bit of market recovery. And then on May 11th, which is next week, the CPI data for April will be released. And I'm expecting it won't be more than March. So even if it's the same level or even if it is a little bit lower, that will make the market to go on a further rally. Since currently the market is falling due to the inflation, and inflation leads to the increase of interest rates, and in a high interest rate environment, the market will not perform as well. So that's why the market is falling lately. So once the inflation seems to have a little bit of slowdown, that will create a better market sentiment. So if FOMC meeting is confirmed on the 50 or 75 basis point, and if the inflation data next week is lower than the one in March, then we might see the market rally back to this resistance here, which is 14.2K. And those two good news is not really enough to push the market higher at the moment. So at this moment, I'm still expecting a trading range between this zone until maybe June or July. So here are some of the earnings coming out this week. And the ones that I'm paying attention is AMD, Marathon Digital, and DKNG. As you know, I have stocks in Marathon and DKNG. As for AMD, it is in the chip sector, and I'm also looking to get some exposure in the chip sector. So tomorrow, I might consider opening up a position on AMD or one of the chips ETF, but I haven't really decided yet at this moment. And speaking of market sentiment, currently the market sentiment is at a very low level, and we rarely see this low level in the past history. As you see back here, we have COVID and the 2018 recession, and the only time that's lower than the current sentiment is the 2008 financial crisis. And as you can see, every time when it got to this low level, it is coinciding to some sort of a market bottom. So currently, I'm not saying we will have another 10 years of bull run, but in a mid-long term, maybe in 6 months or in a year time, I do see another market rally. Maybe it will take us back to the all-time high, or maybe it will even top over the all-time high by a little bit. But at current level, the risk-reward ratio is very favorable to be buying in the stocks. Now, between my friends, sometimes I send funny memes to each other, and one of the memes that we always send is the buy the faggot meme by Warren Buffett. And now this meme became true as Buffett revealed his biggest buying spree in years. So he is buying during all this time when everybody is selling, when the market is going down. And you know, it is also one of a phase. Be fearful when others are greedy and be greedy when others are fearful. It is really easier said than done. If you're watching on social media, if you're trading, everybody's talking about buying puts, everybody is talking about a market crash. And this market sentiment data really confirms the fear in the market. So he's really being greedy when others are fearful at the moment. And it is also why last week I posted a video on saying all in, it is now or never. You may not catch the absolute bottom, but currently it is better to buy than to sell at the moment. And another data that I want to show is the VIX. So currently we are at a resistance level, and as you know, when the VIX goes up, the market tends to go down. So technical picture, we're at resistance, and then on the macro, we have the FOMC meeting confirming the 50 or 75 basis point, and then we have the CPI data next week, which I think will have a lower inflation rate. So when the macro ease off the fear in the market sentiment, and with the VIX on a resistance, I do see VIX coming down for the next 1 or 2 weeks, which in the short term, we might see some sort of a market rally. And the last data to look at is the 10-year bond yield. As I've mentioned this many times, this has a inverted relation with the tech sector. So currently it's sitting at the long-term resistance line, as you can see here, starting from the 80s. And we have a little bit of breakouts just like in previous time. And on data, we're still showing divergence between the price and RSI. So in a technical standpoint, it will either have to consolidate or come down a little bit. But when the macro yields off the fear sentiments, such as the FOMC meeting and the CPI data, then the bond yield will most likely to fall back down in self-consolidation. So those are the reasons why I believe we will see a little bit of a short-term market rally. And I'm giving the target of 14.2k before I sell anything. So this is all I wanted to share today. If you liked the video, do hit the subscribe button and give me a thumbs up, and I'll see you guys next time.